Okay, we're going to take a deep dive into looking the stock of Coke. That's ticker symbol KO. The other Coke stocks are really bottling companies, so they're just taking the syrup from, let's say, this stock KO, and they're adding water or whatever they have to do, putting it in a bottle and selling it. We're dealing with this company KO, which is they really own the secret recipes and everything for all of these companies. They own quite a few different brands. So, for example, Minute Maid, Dasani, Powerade, Vitamin Water, Sprite, Schweppes, lots of different brands, and this is not all of them. And that's good because we can see soft drink consumption, in the red is America, it's going down. The blue is Canada, also going down. Nevertheless, they're getting growth in 34 of the 40 products or markets. They're gaining share, and that's because they're going into new countries, new places where people also want Coke. And so they are growing even in Coke, and that's good. And they're getting organic revenue growth of 6%. That means it's not because they bought a company and that new company has sales and, oh, look, we're selling more. No. It means the companies they already own, like Coke or like Dasani, are growing by 6%. So that's very useful. Now, one of the companies they bought, very interesting, Fairlife. So they're getting into milk. Once again, diversifying even more. It's supposed to be a humane milk. The chocolate milk is apparently supposed to be very good. People who work out really like it. It has 50% more protein. So it's getting into the range of, let's say, some people who have shakes, or maybe people even use this milk to have shakes. So very positive brand, very powerful brand. It's lactose free. Doesn't give you that bloating feeling. 50% less sugar. People... there's a lot of buzz about the milk. Sadly, it was affected because people were buying it because it was so humane, so they thought, and they got all of these lawsuits of actual animal abuse. So sadly, some problems there. Nevertheless, Coke owns Innocent, a smoothie drink, and they also recently bought Costa Coffee, which is very interesting. It's almost like Starbucks. It's in London, and they've opened up in other places. So Coke is diversifying. We'll have to see how all these things play out. But because they have specifically drinks and a massive distribution network and all these bottling companies that are on board with them, it's very easy to, let's say, take Costa Coffee to other countries. It's very easy for them to, put these things into bottles at a very low price and let them show up kind of everywhere. Now, looking at the stock price, generally, of course, there's ups and downs, as you can see in the graph, but generally over 5-10 years, you're seeing kind of an uptick in the price, and of course the dividend payout, which is the dollars over the whole year. So, for example, if you own one share, you would now be getting $1.60 per year for owning that share, and the yield, which we talked about last time, that's the price you pay for the stock and how much that $1.60, the percentage of that is. So the lower the stock price, the higher the yield, and you can see the dividend is continually growing, which we also discussed, which was a really good thing. And we haven't had this type of yield of getting close to 4%, except for maybe once in the past 30 years. So it's looking for a very attractive buy right now, just because of this strong company and very strong yield, high yield of 4%. That's very attractive to a lot of people. And in fact, you can see this Barron's article talking about, these are great companies with, once again, this type of yield, and the price is just going to bounce back and it's going to come higher. And so people are very positive. Now, one of the big positive things that I had seen in reading their 10K, which is an interesting idea, which is the fact that they're looking at digitizing, specifically their operations through use of data, artificial intelligence, automation, robotics, digital devices to increase efficiency. And that is really an amazing thing, because I had heard that there might even be some bottling plants and places where, computers are not used much there. And we'll discuss how does Coke deal with these companies. But let's just quickly look at their debt. So we can see that they've been issuing debt, taking out debt and paying off debt, and what they're issuing seems to be going down, and what they're paying off is is good. They're paying off more than they're issuing. Nevertheless, as much as that's true for the financing, when we look at the liabilities and equities, and just to be clear, the right-hand column here, for example, is the previous year, and the left-hand column is the current year in bold. So the current liabilities, that means whatever is going to come due that year, it's going down. That's good. Of course, the long-term debts are going up. So presumably it looks like they're almost just trading, handing off some of those debts that, they're not paying off this year. They're going to take care of them at a later date, which is not so great. Now, just looking at some of the obligations. So what do they have to pay in 2020? So that's next year. Well, it looks like there's $10 billion of purchase obligations. That means they actually have to buy something, some sort of service or some sort of, let's say, raw materials, whatever it is. They have some agreements, and it might have to do with the merger and acquisitions that they've made. And when we're looking at this total, what do they have to pay? They have to pay $28 billion. Of course, it just kind of looks like some of that commercial paper borrowing has to do with these purchase obligations. So I don't know, there's probably some overlap there. But nevertheless, it doesn't really matter. The point is that you can see it's going down to 12, going down to 10. A lot of this $28 billion will presumably roll over into other years. But the point is that those obligations are continually going down, which is good news. In terms of bottling plants, so we mentioned them briefly, and the Coke mentioned one of their concerns was they depend on the financial strength of these bottling plants. So when there is a recession, when there are these problems where they have to, let's say, fire people, these other bottling plants. They're not owned by Coke necessarily, mostly, and Coke relies on these separate companies doing well and being able to buy the syrup and sell them. Now, what happens if they don't do well? Well, if they're a really big bottling company, well, they can presumably borrow, just like Coke is a big company. The banks will let them borrow because they are certain that they'll be paid back. If they're small bottling companies, there's a chance that Coke will actually buy these bottling plants and turn them around, turn them over, keep them going over the crisis, and we'll talk about that. But it is important to mention that they do kind of rely on these other companies doing their part and doing it well. Okay, just in terms of taxes, some interesting things here. We can see 2017 on that far right, 81%, and it's going down to 16.7%, so taxes are getting better. On the bottom, you can see that there's almost like $500 million of unrecognized tax benefits that they have to go through the government to make sure that they can actually get that. So some interesting things. Also, they expect in 2020 to have a 19.5% tax rate. So that's interesting. Nevertheless, so taxes, it's a little bit up in the air, those benefits and the higher rate. But nevertheless, if you can look at this balance sheet, you see the tax payables. Once again, the far right are previous years, and far left is the current year, or 2019, I should say. So you can kind of see that the tax amount that they pay seems to be always around the same. Presumably, that's because some years, even if they had higher tax rates, they made less money. Right? They have accountants to work out all these types of things. But it seems to be in this $500 million range, so not a major thing, but something to keep an eye on. Okay, so in terms of investment activities, so you can see on the far right, 2017, they had, let's say, $17 billion of investments, and then it went down to 8, and then it went down to 5. And so it looks like they're kind of selling, right? You see the proceeds from these disposals, right? They're selling these investments. And so if you're cynical, what you will say is, hey, they owe a lot of money. They're trying to pay dividends. They don't have that money. It's about a little over $6 billion, closer maybe to $7 billion of dividends. They don't have that money. They're selling off assets like buildings and things like that. They mentioned that they sold a $750 million office building in New York City this year into 2019. So if you're cynical, that's kind of the way you look at this. What I think is what Coke kind of touts, and I had kind of hinted at this before, is that they will buy bottling operations, like I mentioned, that don't have this internet or efficient infrastructure. They'll buy them, maybe they're older, and they will convert them. They'll update them. They'll do all these things to them, and then they will sell them off. So that's why, for example, 2017, they did quite a bit of selling of their ownership in these bottling companies. They're very big, large companies that cost a lot of money. Coke doesn't want to, be micromanaging these things. And so, that's the positive outlook. There's probably somewhere in between, right? They're probably thinking about how much money they have on hand. How long can they keep holding these bottling companies? I'm sure they don't like to hold them for long. One of the positive things I would say is you can see in terms of the acquisitions, they are taking out more money. It looks like they're buying more things. So it's not just that they're selling things off. and trying to get more money. And I don't know, they're spending money too, so it's not like they feel like they're cash strapped necessarily. Okay, so that kind of gets a nice picture of where is Coke. So they don't own a lot. It looks like they don't own a lot as many bottling companies as maybe they did in 2017. They still own some in India and different places, and they're getting more of an eagle eye view instead of micromanaging. Okay, now in terms of foreign currencies, this is, I think, actually really important to mention because they mention over here in one of their things that could give a hiccup to them is the US dollar and how that compares to foreign currencies. So you can see that the American dollar, for example, automatically strengthens when the euro weakens and vice versa. Now, why does that matter? So if we look at a foreign currency in Latin America, you can see over here that the operating income, so what is their profit off of a sale, it grew 34%. That's amazing. But that includes a 13-point currency headwind. That means that they really would have grown 47% of operating income. But because of the whatever currency that's going on, whether it's in Argentina or somewhere else, it looks like it's only 34% instead of 47%, right? Now, why is that? So the reason is because when they are making their balance sheet, their income statements, all these things to show investors, they have to convert all of these currencies back into American dollars. Now, do they actually convert it? No. But on the balance sheet, they have to show what the conversion rate would be. And so that looks worse for them when they're showing an investor. It looks worse when the American dollar is doing so much better, right? Whatever it is, whether it's a peso or whether it's a euro, it'll just, compare worse. It looks like they're not making as much money. Now, of course, it doesn't entirely matter. And the reason is because, in theory, if they keep that money in that market, just because that currency doesn't do as well, it still presumably buys the same things in that market. So let's say the Canadian dollar is doing worse than the American dollar. Well, a Canadian dollar will still buy, let's say, a Coke at $1, just like in America, Coke might be $1. And so, just the value of the dollar, it's not so straightforward whether that actually will affect the operations in that country. But what it will affect is how an investor, someone else buying the stock. And that's important because we want to know what price can we get the stock at. So now, same thing, let's say in the Middle East, they actually lost operating margins. That means it costs a little bit more, 14%, to make, let's say, a can of Coke and sell it. But that includes a 19-point currency headwind. So, those currencies really make a big difference. Now, what does Coke do? Well, they try and hedge. They try and buy currencies or sell currency futures and things like that. But they can't cover it all. Why? Because you have to tie up money to do that instead of buying debt or whatever it is. Paying off debt. And you can see in 2018, well, it looks like, a currency translation, $2 billion because of foreign currencies. So this is the type of number that can, play with what's going on in the balance and the income sheets. And once again, does it really matter? No. But will it affect the price? Yeah, possibly. And just looking, so what's going to, for example, happen during a recession, which is what we might be going into. So here we have the Federal Reserve Bank of Boston, and we can see that the US dollar actually increases when there's a recession, or in fact a global recession. Why? Because the dollar serves as a hedge. People buy it as a flight of safety, right? They're concerned about their own, let's say, Canadian dollars, so they buy American dollars. And of course, there's lower inflation in the US, so people switch to the American dollar to protect against inflation and all these different things. So it doesn't really matter. The point is that the US dollar, presumably in a recession, will do better. It's already doing better in this crisis. It's already going up. And so that will affect the bottom line of international companies, including Coke. And so it'll look like they're not doing as well. It'll look like they don't have as high earnings. Okay, nevertheless, in a recession, it appears from Forbes that the earnings per share have increased, right? It means that Coke was able to do well even in previous recessions. Will that happen here? I don't know. That's hard to tell. But nevertheless, it's a good balancing point. Okay, so where does that leave us with Coke? So you can see the stock price right now. It's at 42.81. It was at somewhere in the low around $38. So that's a $4 difference. That's about 10% difference. And that $38 was pretty much as cheap as the stock has been for the past 5 years or so, 4 or 5 years. So it seems like a pretty good deal. Now, it was $60 a month or two ago a fair price? Probably not. It's probably overvalued. And that's also, I think Warren Buffett even mentioned this idea that recently Coke has been somewhat overvalued. But nevertheless, so $40 seems like a very good deal. It's almost like you're paying what people paid 5 years ago for this stock. And that really is true. It looks like a good deal. Is it still over? Are you still paying too much? And what would be an even better deal? What would be, let's say you say it's not a good deal. What would be a good deal? What is a fair value? So let's just mention a few other tricky points to Coke, and that is the current ratio. So that means if they just sold everything off and wanted to pay off the debt, how much over or under would there be? So if you have above a 1, that's good. That means you can pay the debt and then some. And you can see in the past 10 years it's usually been above 1. In the past 2 years it's not. That's not so good, especially in a difficult time like this. In terms of liabilities, well, it's been pretty constant. It's always, even 6-7 years ago it was around 56. Now it's around 65, so that's a $9 billion difference, but it's kind of always hung around this number. And that was a key point. You saw that kind of increase in spending in 2014, right? We went up to that $9-10 billion jump around 2014, and you can kind of see these operating margins improving. Now, once again, Coke says that's because they're buying these bottling companies, they're improving them, they're selling them back. Now, it could be because just the ingredients cost less. But let's take Coke at their word for a moment and assume that they're actually doing something, because you can see there's some pretty high changes in terms of, percentages that they're improving their bottling profits, or their syrup profits, whatever. They're the profits that they're making off of their product, which is really the syrup. So that is pretty good. And that really coincides with some of these sales like we saw in the last few years of these bottling plants to other people to manage them. They're not managing them. They're improving their price for the mix. And that's because they're selling back these improved bottling plants, right? The bottling plant is doing better. They can afford to pay Coke a little bit more for the actual mix itself. So that's actually quite good for Coke. It means that their investments, I think, are paying off for them. Cash on hand in the past year or two, it's going down quite a bit, which is not so good in a difficult time. Nevertheless, I think they will be able to borrow from banks at a reasonable rate, just because there's such a low interest rate right now. Okay, so let's go back to the price of Coke. So, you can kind of see the price is going up over the past, let's say, 8-9 years. The earnings per share kind of are on an upward trend. There's obviously some big blips there where it jumps up to 2.5. That middle graph, that's TTM, means the trailing 12-month earnings per share. But in general, they're kind of going up. There's some downs, there's some ups. And so that's very positive. And that will determine, or help determine, between the price and the earnings per share. That's how we get the price earnings ratio. That's how we figure out, once again, are you paying, let's say I highlighted this 2013 year, right? At $31, if you bought the stock at that amount and they're making you almost $2, so it's going to take you about 16 years, that price earnings. It's going to take you 16 times those earnings. So you'd have to wait 16 years. You'd get those earnings each year to eventually pay for that price in the stock. So 16, we mentioned last time, that's a little bit above that kind of hold number. Maybe you don't want to necessarily buy something at such a high PE, but you can kind of see that the stock for Coke has never really gone that, not really below 16 so often. There obviously are some years, between 2010 and 2012, but that's only because the earnings per share just happened to spike in those years for whatever reason. It doesn't really matter. So the PE ratio doesn't go so far low. And it's quite high right now. It's right now up to 20. So how far down can we go? Well, I don't really know. It's always hard to tell. But just trusting Coke. So they're saying that their earnings per share this year, of course, are 211, but they're trusting them that next year is going to be 225. So that's for sure not going to happen. They're not going to earn that much. People aren't buying as much Coke. They're not going to restaurants. They're not going to stadiums. And once again, Coke doesn't get that profit when you buy the can versus when you buy the fountain drink. It's all the same to Coke. So there's probably less Coke being drank right now. So they won't earn that 225. Now, what would be? Eventually, they might actually earn that 225, though, right? But so, what would be a fair price? So let's just say that once again, the equation is: let's say you take the stock price, you divide the earnings per share. That's what you get the price-earnings ratio. So if there was a stock price of $35 at last year at 211, that's 16.59. That's similar to that 2013 price-earning ratio, right? So assuming there's no improvement in the earnings of Coke in the next 2 years, that's a pretty good price. That means that was on the lower price-earning ratio. 2013, that's going back 6-7 years. $35 at 225, that's even better, right? That's getting now into that PE ratio that we talked about, that all companies at 15 to 16, that's kind of looking attractive. Below 15 is where you start really wanting to buy. So for me personally, I think if it got to $35, I'd be kind of happy starting to buy the stock. I think that actually, as much as it looks like the stock market is rallying right now, I think it's going to go down. It's only rallying, I think, because of day traders and swing traders and all these kind of short-term people trying to make back some of the money they lost. They see a chance. I don't entirely know, but that's what it might seem like. So it seems like the stock, there's a chance that, right now the stock for Coke is 40. It was at 36 before or thereabouts. I think it's very possible to come back to 36. I think it's very possible to come down to 35. I think it starts to look attractive at that price. Once again, this is not, financial advice. I'm not a financial analyst, but me personally, I think I would start thinking about, buying a little bit of Coke, and then as the stock gets cheaper, buying a little bit more. And yeah, their next earnings report might not look so good, specifically maybe because of that foreign currency and maybe because of some of that debt. But I think they're a strong company. I think that they'll survive. I think that they'll go beyond the next 2 years. I think that the dollars of all these different countries and foreign currencies will come back to, the way they were kind of balanced. And so I think that there's a good chance that we'll go below 35. I think it's a good time to start buying, and I think there's a good chance that the stock price will eventually come back, because I think 35 is quite cheap. It's cheaper than it's been for quite a few years, 6-7 years. Would I put all my money into Coke if it got to 35? No, I think it'll go lower, but I do think that's a really good time to start putting in money into Coke. And we'll have to kind of revisit Coke when it gets to these lower levels, and we'll have to give an update. Okay. Thanks for watching.